Today, Palantir stock, ticker PLTR, surged about 5.6% after a major announcement from the U.S. Department of Defense. The Pentagon officially designated Palantir's Maven AI system as a program of record. Now, that might sound technical, but here's why it matters. This move transforms Maven from a temporary pilot project into a permanent, budget-backed program. In simple terms, it means long-term, predictable government funding. That kind of visibility is extremely valuable for a company like Palantir that already has deep ties with defense and intelligence agencies. That's a big reason why investors reacted so positively today. Let's break everything down so you can decide whether Palantir is still a good investment. First, why did the stock jump so much today, and how has it performed over time? Today's surge was driven primarily by that Pentagon decision. It significantly reduces uncertainty around one of Palantir's key AI initiatives and reinforces its position as a trusted partner to the U.S. military. The broader market rally added a tailwind, amplifying the move. Looking at the bigger picture, Palantir has been one of the most explosive stocks in recent years. Over the last 5 years, the stock is up roughly 590%. Over the past 3 years, it has surged more than 1,800%. Which is an extraordinary run. In 2025 alone, the stock gained around 150%, driven largely by excitement around artificial intelligence and strong commercial growth. However, it hasn't been a smooth ride. In early 2026, before this latest rally, the stock had pulled back about 10 to 15% year-to-date. This highlights a key point. Palantir can move quickly in both directions. Second, what exactly does Palantir do? At its core, Palantir is a software company focused on data integration, analytics, and artificial intelligence. Its mission is to help organizations turn massive amounts of complex data into actionable insights. It has 3 primary platforms. Gotham is designed for government use, particularly defense and intelligence agencies. It helps with mission planning, surveillance analysis, and real-time decision-making in high-stakes environments. Foundry is the commercial counterpart. Companies use it to streamline operations, optimize supply chains, and make data-driven decisions across their business. And then there's AIP, the artificial intelligence platform. This is where Palantir is leaning into the AI revolution. AIP allows organizations to deploy large language models and advanced AI tools within their own secure environments, which is especially important for industries that deal with sensitive data. What makes Palantir stand out is its ability to bridge government-grade technology with commercial applications, creating a unique competitive position. Third, what are analysts saying about the stock? Analyst opinions are still quite divided, but the overall trend has been shifting more bullish as the company continues to execute. For the next 12 months, the median price target is roughly in the $190 to $200 range. Some bullish analysts have price targets as high as $230 and even up to $255 in more optimistic scenarios. Looking further out, long-term projections suggest the stock could reach around $288 by 2030 if growth remains strong. There are also valuation models that estimate a fair value close to $379 over the next few years, assuming continued dominance in AI and government contracts. That said, not all analysts agree, and the wide range of price targets reflects uncertainty. Fourth, let's talk about valuation, because this is where things get more controversial. Palantir is trading at extremely high multiples compared to most companies. The price-to-earnings ratio is roughly between 230 and 250 times earnings, and the price-to-sales ratio is around 80 times. These are not normal valuations. They imply that the market expects Palantir to deliver very high growth for years, with little room for error. Historically, even the most successful software companies tend to see their valuations compress over time as they mature. So for Palantir to justify these levels, it needs to continue growing rapidly while expanding margins. Fifth, is Palantir still a buy? Right now, the consensus rating is somewhere between a hold and a moderate buy. If you're bullish, the case is that Palantir is becoming a foundational AI company, especially within government and defense. The Maven program reinforces that narrative, and its commercial segment is gaining traction quickly, particularly with its AI platform. There's also a strong argument that we are still in the early innings of enterprise AI adoption, and Palantir could be a major beneficiary of that trend. On the other hand, if you're cautious, the valuation is difficult to justify at current levels. Many investors prefer to wait for either a pullback or stronger earnings growth before adding new positions. And for bearish investors, the concern is that the stock is already pricing years of future success, leaving it vulnerable to disappointment. 6. What are the key risks? The biggest risk is valuation compression. If growth slows or if the company misses expectations, the stock could decline sharply as investors reassess how much they're willing to pay. Another major risk is customer concentration. A significant portion of Palantir's revenue still comes from government contracts. While those contracts can be stable, they also depend on political priorities and defense budgets. Competition is also intensifying. Large tech companies like Microsoft, Amazon, and Google are all investing heavily in AI and cloud infrastructure. At the same time, smaller, specialized AI startups are emerging and targeting niche use cases. There's also the issue of insider selling. When executives sell large amounts of stock, it can create negative sentiment and put downward pressure on the share price. 7th, what else should investors pay attention to? Palantir has gained increasing institutional support. It was added to the S&P 500 in September 2024 and the S&P 100 in March 2025. This inclusion has driven demand from index funds and ETFs, providing a steady source of buying. Another important factor is its AI bootcamp strategy. This approach allows potential customers to quickly test and implement Palantir's software, often within days. This significantly shortens the sales cycle and has been a key driver of its accelerating commercial growth. Also, keep an eye on upcoming earnings. The next report, expected in early May 2026, will be critical. Investors will be looking for updates on how the Maven program impacts revenue growth and whether the company can continue to justify its premium valuation. Finally, one broader point to consider is that Palantir is no longer just a niche government contractor. It is increasingly being viewed as a core player in the global AI ecosystem. So, to wrap it all up, Palantir is a high-growth, high-expectation AI company. The Pentagon's endorsement of its Maven system is a major positive development that strengthens its long-term outlook. However, the valuation remains very high, and that introduces risk. Whether it's a buy comes down to your investment horizon and risk tolerance. If you believe in Palantir's long-term role in AI, you might see pullbacks as opportunities. But if you're more risk-averse, it may make sense to wait for a better entry point. Thanks for watching. If you found this helpful, please like the video and subscribe to the channel for more stock analysis and investing insights.